Good morning, everybody. And yes, this is a fan favorite, which is why we are the finale session of the conference. And I was reminiscing with Connie Stein about when my first BAFT and what this session was almost 2 decades ago, and how you would attend, and there would be some snippets around traffic and number of market participants and a couple of things about initiatives, but there wasn't much conversation. It was like 3 disparate sessions, and sometimes Nacha would be here and not be here. And it would often be talking about traffic growth or traffic declines, and a couple of plugs on kind of what's going on next in the industry. Well, here we are, almost 2 decades later, and no, I'm not any older, but I am wiser. And I just want to thank my panel. I'm really honored actually to be up here. As I say to most people, I don't really have to do any work. I really just have to not fall off the stage, because each one of them is an industry expert. In the opening, as I mentioned, I'm Stacy Rosenthal. I work at Santander Bank. I head up core payments product management. I also have a dual role. I head up what is called our modernization, which is basically the upgrade of our platforms to be able to handle so many of these great payment initiatives like real-time payments and ISO 20022. I'm going to let my panel introduce themselves. I'm really delighted to have, Matt from Swift, Cheryl from the Fed, as well as Russ from the Clearinghouse. So I'd like to start off with each one of them introducing themselves, their role, and a bit of the strategy for each one of their organizations. Because I think we've heard over the past few days a lot of wonderful themes and dialogue, but I think it's always great to talk a bit about where we are now and where we're going over the next few years. So why don't we start off with Matt?
Perfect. Good morning, everybody. I'm very happy to see a lot of familiar faces in person. It seems like it's been quite a while, but I'm Matt Luce. I'm at Swift. I'm in the strategy organization at Swift, really focused on a bunch of different functions. But obviously at Swift, you heard about ISO earlier. That's a critical execution that's happening. But really at Swift, to level set really where our strategy is. Let me just take you back and think about, well, what is Swift? Where have we been successful? What's our organization? And simply speaking, we see ourselves kind of as, the global economic interoperability company. So we created, almost 50 years ago. So next year will be our 50th anniversary, But in the 70s, created the system that has worked for the last 50 years in some form or fashion. Obviously, it's changed in some way. It's become more efficient. And now we're looking at what the next 50 years is going to look like. From my perspective, our role isn't really going to change, It's about interoperability and how do we really bring connectivity for global transactions. And those have been payment transactions and securities transactions, and they will continue to be payment transactions and security transactions going forward. How we do that may look quite different, And the infrastructure we use, the technology we use could be quite different. We've been traditionally thought of as a messaging company. I keep arguing, Messaging has not been our success. Our success has been a secure network with a lot of you in the room as members of that network, And bringing that interoperability to initiate transactions, securities, and financial transactions cross-border. That's still our goal. How we're going to do that and the services we offer at the center will look quite different. Collaboration, you heard that from many of the panelists, is critical. It's really critical for us. We collaborate with all of you in the room. I collaborate with my panelists here as well. And we're getting into some of the collaboration, we're doing now. So it's, to me, that interoperability, using technology, getting more efficient is going to be critical. How that future is going to look, and we'll get into that later in the panel, I think is going to be interesting as well. I've been doing this for a very long time. I've been probably at BAFT sessions almost as long. And we keep talking about the same things, but I actually think the next 5 to 10 years is a critical time, and we're going to see a lot of change.
Thanks, Matt. It's really interesting. I also alumni of Swift, and if you're at a cocktail party, people still have no idea what you do.
Unfortunately, now friends and family, with some of the more recent geopolitical situations, oh, that's the company you work for. I'm not really sure they understand what we do, but they're starting to get a better understanding, of the impact we may have.
Yeah, absolutely. Back in 2009, similar experience. It's like, oh, now you're front page news. Is that a good thing? Well, thanks, Matt. Over to you, Cheryl, to share a little bit about yourself and what's going on at the Fed.
All right. Thanks, Stacy. I am Cheryl Venable. I run our payment operations for our Federal Reserve Financial Services. And previously to that, ran our retail businesses, ACH and check. And I'm going to talk a little bit about that. But I'd say our priorities probably cross three primary areas. But I'll first say that as a reminder, the Federal Reserve is in payments to really promote, the security, the reliability, and the accessibility of the payment system. And we do that through multiple roles that we play out that really then align and lay out the strategies that we focus on and try to achieve those elements of that mission. So first, I'll talk about maybe from an operator perspective, because obviously we're a payment provider and provide services along a spectrum of financial services. I mentioned retail, talk about Fedwire funds and securities and national settlement service as a wholesale front. And as I think about kind of our priorities over the next 1 to 3 years, clearly, I know Connie talked about this yesterday, it's about launching FedNow, which is our instant payment service, and making that available for launch in 2023. So that really is kind of the major focus, is how do we continue to make payments faster? And in that realm, we also are looking at and have continued to innovate and enhance our existing payment services to make them more efficient and to make them faster as well. I'll mention too, another kind of strategic priority of ours, we just heard a whole panel on ISO. We have efforts underway as well to transition our Fedwire funds application to ISO. We announced to our customers just a short bit ago that it will come more in the first quarter of 2025 to allow us to focus on FedNow for next year and allow also to respond to some of the feedback that we received from customers with regard to their desire to do testing and make sure that we have time to do that, that we have a separation between when Russ and his organization is transitioning their organization to ISO. So that's another major focus. And then in addition to looking at continually enhancing our overall reliability, resiliency of our payment services, and looking at enhancing our what we call our value add or our information and risk management sort of services to really help financial institutions manage their risk. So that's kind of from an operator perspective. We have a kind of leader catalyst role where we really work with the industry to drive efficiencies in the payment system. Again, Connie asked a question a little bit about the ISO and the business coalition around e-invoicing. And we are constantly working with the industry to look at how do we make payments more efficient? How do we drive electronification? I know we still have a big contingent of checks in the US, and obviously that's something we want to continue to push toward electronic adoption. And then finally, I'll just mention another strategic priority of ours within the Federal Reserve System is actually we're transforming ourselves as an organization. So some of you might have interacted with us in a structure called our product offices. I just mentioned in my intro that previously I had responsibility for our ACH and check business lines under the retail payment office. I was the product manager for that, for those two business lines. We are actually doing what many of you have already done, which is transition to a more kind of functionally aligned structure within the Federal Reserve to deliver our financial services, really to achieve a couple of very specific outcomes. One is to be more customer centric and offer a more enhanced kind of customer service experience, and then also to deliver our services more quickly, and so that we can respond and think about a holistic view of our services and get out of just thinking about what can we do for wire, what can we do for ACH, really thinking about it from an enterprise perspective about how our customers utilize our services so that we're making proper priorities and trade-offs across our business lines. So that's what I would highlight. Just a few things.
And when do you sleep? No, thanks for sharing insight into the transformation to looking at things from a client-centric, holistic view. Of course, faster payments, and then ISO. We all love to talk about standards. So we'll definitely be digging into that more and appreciate you taking time to join us. So Russ, over to you to share your perspective for those that may not know you.
All right. So Russ Waterhouse, I'm responsible for product and strategy at CCH. So that encompasses our traditional products, ACH, chips, and check clearing. but importantly, the digital future. And I'll talk a little bit about that. First, on the chip side, so obviously the Fed announced that they're delaying on the ISO side. We're actually going to press forward. So that was a decision we took internally a couple of weeks ago. So chips actually will move forward November 23 with the ISO format. I do think that's critically important because if you think about the profile of chips, probably 95% of the transactions on chips are cross-border. So it's critically important, I think, that we get chips to the same place that the other major market infrastructures are in terms of the ISO format. So that's the news on chips. We're also, I guess, one other point on chips. We're also looking to extend operating hours. So there's a very active conversation right now as to whether we extend the operating hours to potentially include a Sunday, so open on a Saturday night. So we'll see if that one passes, but it's certainly an active conversation, one I'd like to push forward. In terms of our primary priorities, so it really is all about the digital age that we're living in today. And that's transforming the way everybody does business, whether it's a consumer or a business, how transactions flow and what the expectations are. And for us, it's really about first delivering value and making sure that the payment systems that we're working on are delivering value to you, the banks, and ultimately to your end customer, but also security, which is critically important. And I think this last panel was all about the data. So I'll give you 3 little snippets on that, on each of those. So one, obviously, RTP is live today. It's ISO based. It has something called a request for payment. So as we thought about the last panel and how do you actually move the data with the settlement information, that is what a request for payment in essence does. It's very powerful. We can actually, and I think Steve probably mentioned this yesterday, you can actually attach a secure link. So it's not a URL that can be hacked and have a porn site on the other side. It's something we call a GUID, which actually allows a biller, whether it's a consumer biller or somebody in the pure B2B space, to actually attach all the information that's required in terms of whether it's an invoice or remittance information on the way back. So we're very excited about request for payment. It's been a huge initiative for the banks. There's actually 3 banks now on the consumer side that are live with the request for payment. There'll be 6 by the end of this year that represent probably 40 to 50% of all consumer accounts in the country. There's actually 9 that have the capability today in their wholesale group to actually initiate a request for payment. So that's also something that's starting to take shape. Clearly, that's a domestic solution today, but one that we also want to take cross-border, and I'll come to that in a minute. Data is huge. Obviously, request for pay is part of data. But the other part is how do you secure customer data? And so we're very focused on customer authentication and permission for data. So some of you may be aware of a little adventure called Akoya. And what that is essentially a gateway for permissioned access to bank data and how do fintechs get permissioned access as opposed to screen scraping. So it's all about securing that data, making sure that the consumer is in control. And that's a theme that really plays through in all of our initiatives, making sure that the ultimate customer has full control and transparency to their data sharing, to what they're being asked to pay, and essentially agreeing to pay it. I found it interesting. I think in the last discussion we talked a little bit about ISO and this notion that we maybe create interoperability with or upgrade ACH or something like that. I know that's been a discussion at some point in the industry. We've just got to move past the legacy to kind of continue to reinvest in ACH. Doesn't make a whole lot of sense to me. There's a brave new world coming. It's already here with RTP. FedNow will show up. And that is all ISO. It's all digital ready. And that's where we should be aiming for, not looking backwards and trying to retrofit old systems. So I'll stop there.
So, I mean, you keyed on the theme of the digital future, and you shared with us the extension of chips and thoughts around moving beyond where we are with ACH. How do you suggest banks move forward and adapt to this pace of change? Where would you place your priorities? Why don't we start with you, Russ, since you're energized around the theme of kind of leaving the past and forging ahead?
I think obviously RTP is the bias, right? So it has all the attributes you need to be digitally ready. It's API ready, so if you want to use APIs to connect, corporates can do that through a bank. Banks can do that. So it has that technology bent. It's instant response. So if something goes wrong, you know it instantly. It's not, you find out 3 days later that the ACH rejected because it was NSF or bad account. You actually know it instantly. It also prepares banks, I think, to compete with fintech. We're seeing an increasing number of fintech products which are trying to emulate what you get in RTP. So one would be Trustly, who are doing guaranteed ACH, and they're offering that to billers. So a biller can essentially pay Trustly to screen scrape your bank account to make sure there's enough money in the bank account that says that debit, when it hits, is likely to pass and not be NSF. Why go through all that trouble? Just simply use RTP. So I do think that's the bias in terms of the future. So yeah.
So Cheryl, do you share similar thoughts? I mean, you manage check and ACH. Do we think we can just flip a switch and culturally change?
So there's one thing I know, working at the Fed for the years that I have and working in payments, is that payment rails stay around for a really long time. I remember, all the different kind of quotes about, check free in '83 or whatever, paper free in '83. I wasn't around in the '83, but I think I was around, but not at the Fed in '83. But I have seen the little placards and things. But so I think for a while, it's going to take a bit of time for, I think, instant payment systems to get fully adopted and to be ubiquitous and to achieve probably the scale that we see today on things like the ACH network. I agree with Russ. I think there are use cases that lend themselves to be better on an instant payment rail, and that's why the Fed is also, in this endeavor to promote faster payments and instant payments. But I think we'll have a few things that we need to work through on that. And one is, like I said, how do we think about use cases that are the right or the best use for the payment system? And when I think about that and thinking about things like fraud and security, I think to me that is the conversation that we need to start having about how do we kind of up our game on risk management, on fraud management. How do we think about that as an industry? And that includes education to the end consumer. And how do we get them to better understand their obligations, the controls that they can take? I think about when ACH was first kind of getting great adoption in the industry. There was a lot of push to educate and make consumers feel comfortable using things like direct debit and direct deposit and what sort of controls they have around that. I think it's not dissimilar to where we are now with kind of instant payments, and how do we educate the end consumer and make sure that they're putting the proper controls around it. So I think that to me is one of the things that we need to be focusing on as a collective.
I agree with that. So I mean, there's a lot of noise these days around Zelle fraud. But ACH debits are actually a source of real pain for banks and increasingly for consumers, because consumers are using them in places they've never used them before. So when you think about open banking, it exists in the US not through law, but through practice. And what's happening today is fintechs are increasingly securing or acquiring banking credentials, right? They're acquiring account credentials, and they're sourcing debits into the system. So the proliferation of that data is actually first a data breach risk for the industry, but it's also how do consumers control their permissions across all of these parties. And I think one of the things we've seen in web transactions, so we just looked at some data in EPN. So this is not the whole ACH network. This is our slice of that pie. And web transactions, which are single approved ACH debits, usually through the web, right, have gone up over the last 3 years, 39%. That's stunning growth. 6 billion transactions a year is where we're headed in that. That's EPN, not Fed. So Fed, double it. And it's gone up $14 billion a day. So what is that, right? So what is that activity? A lot of it is moving money to fintech wallets. More recently, is crypto exchanges. Gambling is the latest fad. And all of that is creating increased risk for banks, right? Because, no, I didn't make that bet. Well, you probably did, but now I'm going to dispute it. So I think we have to move to a world where requests for payment, there's so many things we can do today to move away from that debit towards a completely permissioned and secure transaction. And that's where we need to go. So I'm not going to get into the detail of the how, because we'll be here all day, but it's something that's within our grasp, and it's something that's essential for us to do as an industry.
Well, we definitely see, the increase in bad actors, regardless of payment type, and only the pandemic allowed bad actors to prey on people even more because we were all at home, more on our devices than ever, and adapting to the change. And I mean, how do organizations continue to stay on their front foot with such a tall agenda? Now, Matt, I'd love to hear from you. You're a former banker. You're now sitting in the center of the ecosystem and hearing from market infrastructures as well as different market participants. Where do you see the challenges and opportunities?
I mean, I think taking a little bit of both, I kind of agree with both of my panelists in one way. RTP, that's the direction, right? The need for speed and doing things and that automation you can get. I think also the digital identity automation and trying to settle things up front and not allowing the old-fashioned way of, well, let's let it go. And then if there's a problem, we'll deal with it when it's a problem. Let's avoid the problem up front, right? So pre-validating things and being able to pre-validate identification with digital identity, I think is going to be really critical. So the players, the originator, the beneficiary, they're good actors up front. You can let the transaction go through. It won't solve all the compliance issues, but it will solve a lot of the fraud and compliance issues. But then I also agree, Cheryl, the fragmentation and the ability to use multiple pay types is going to exist. And actually, there's going to be more pay types than ever before. Whether it's going to be crypto, stable coins, central bank digital currency, or something in this room we've never even thought of, that 2 weeks from now becomes the next thing that everybody's talking about. And so how you interoperate with all those fragmented systems is critical. And for us, it's how do you reuse what you've already invested in? And how do you make sure you maximize your investments? Right? So we're building the ISO foundation. Right? To me, that's a massive investment. Everybody in this room in some way is investing in that. Right? And the last panel talked about when are we going to recoup from that? It's going to be years and years. But if you think about that, how do you then leverage that to do more, right, with the fragmentation? And it doesn't mean everything's going to move to ISO. It's not going to be possible. Like the last panel was Venmo. I think Venmo is going to be ISO, right? They've got their own way, their own closed loop system, right? They're going to do their own thing. There's going to be 40 more of those, right, that the younger generation is going to do. They're going to hop from one to the next. They're going to be investing in different things. And so the criticality is how do you, without having everything on one standard, get as much to one standard as possible, but how do you maximize, based on those use cases, the best payment method? When the reality is going to be, think about your own personal life. We probably all know because we're in the business and we understand that we get paid via ACH, right? When we make that quick PayPal payment, it's on RTP, right? And when we bought our house, it was a wire. The average consumer has no idea, right, what pay type they use. The treasurer 20 years from now is going to have no idea. They're not going to care, right? Because we're going to create the system that behind the scenes allows for the routing to be efficient and pick the best route based on the use case, based on the timing, based on the cost, and based on a variety of factors, right, using AI and new technology. And so we're starting to morph into that embedded payment. The payment doesn't exist anywhere, but it doesn't mean there isn't going to be a lot of optionality for payments. And so as we transition through that, it's going to be difficult because everybody's going to be doing it at different paces and everybody's going to be at different levels. So as organizations, banks, fintechs, we've got to figure out how we come together and collaborate to make that happen in as seamlessly a way as possible.
Can I just add something?
Yeah, of course.
But I think part of the thing that we'll have to address then is how do we educate the consumers, and maybe companies and merchants may not be as hard to educate, but if it looks seamless and they don't really care, they will care at a point in time where they're obligated to cover the loss or, based upon the different kind of rules and, regulations and laws around things. So to me, that I think it was the CEO of this morning who was talking about the payment system, about that's kind of the long pole in the tent. And to me, always kind of the biggest and most challenging thing to work through is how do you rationalize, if you can even do that, rationalize some of the rules and regulations around the different payment types.
The education of the consumer is really critical because how many consumers today are investing in crypto, right? You saw the whole unraveling of stablecoin and the ask of, well, should they all be made whole? Kind of an insanity of the society we live in, which is they all made a decision, whether they understood the risks they were taking, right, and understood what they're investing in. But this is the world we live in, right? There's a lot of people investing in the market, and they have no idea what they're actually, what information, where their data is going. It seems they don't care, but that seems to be the younger generations, right? They post anything online and social media, so they don't seem to care to have any privacy of what they do on a minute-by-minute basis. But where their data is going and how it's being used, and then what they're investing in, I'm amazed, right? And it's been good, but there's going to be sadly some.
For a bank, though, right? It's their customer. Face it, there's going to be a lot of stupid consumers. That's not going to change. So first is their customer. They're trying to protect their customer. They're trying to provide a competitive offering to fintech at the same time. I do think that, yes, messaging to the consumers is great, but we can actually deliver the tools that would actually put a safety net around them.
Yep.
And if banks don't, I mean, one, it's going to be they'll lose business. Two is they're going to often eat it in terms of the fraud. And they face reputational risk if they don't. So it's really an imperative for the industry to be responsive to it, and I think we are being.
But how do organizations adapt to this pace of change? I mean, there are limited resources, limited budget, regulation is definitely mounting. We all had to, whether we did business in Russia or not, we had to retool and be proactive with the current sanction situation. So where should organizations place their bets? How should they engage? Why don't we start with you, Cheryl?
Well, I guess from my perspective, and you heard of it from a few comments on the panels this morning where they were talking about understanding what their customer needs and understanding about kind of that broad customer experience and really, focusing in on the pain points or the problems that they're trying to actually solve. I really do think that that's an important aspect. And sometimes maybe this group, because we are kind of providing the rails and we're working with financial institutions, I think we have to really challenge ourselves to, reach beyond that, which I think all of us have begun doing that over the last number of years, but reaching out to, understanding fintechs and understanding corporations and understanding even consumers and the consumer groups. I know on the FedNow side, we've engaged a broad number of organizations to understand kind of that end-to-end view. And that has really informed, our design of our FedNow solution and the capabilities that either they'll be there day one or, day 2, 3, 4, et cetera. And I feel like we just need to be collaborating and talking more and understanding what those needs are.
And, what do you think companies should be doing in terms of how do you make a choice, what table to sit at?
I mean, you've got to really think through, I think to Cheryl's point, what do the customers want? So you've got to start with your customer, which I think almost every bank or company now has realized. It starts with the customer or their customer's customer, because in this world, it gets very complicated where that end customer sits, and understand what are they looking for? What is your customer base? Now, if you're a large global investment bank, you've got diversified customers from consumers all the way up to financial institutions and everything in between. So that's going to change depending on which spectrum. But the reality in this space, I've been saying it for a while, it's actually starting to all come together, right? You heard earlier panelists, and you hear this quite often, the treasurer of the future, they can go home and do all their banking with a couple of clicks, and then they get into the office and it's 6 VPNs and it's a painful process and it's not automated. That's changing. So the customer expectation across the board is going to start streamlining into one expectation, which Russ hit on earlier, which is speed with transparency, ease of doing things. Safety and security, though, we've all touched upon it. It's the most critical, right? For us at Swift, it's our most critical asset, right? It's gained our ability to be successful for 50 years, right? Reliability, safety, security. You can't put a price tag on that. And as an industry, we can't put a price tag on that, right? Both what the clearinghouse and Fed bring from a safety security perspective is critical and the foundation of financial services. And that's not going to change. And so use that as a foundation. How do you build upon that safety and security and bring value to your clients where you can differentiate yourself? And then lastly, you've got to collaborate. If you try to do this, unless you're maybe a very few of the very large financial institutions out there that have very deep pockets and can do a lot on their own, you've got to work in this industry traditionally with others. That universe is expanding. whether it's market infrastructures, whether it's fintechs, and in the future of who those fintechs are going to look quite different. But picking your partners really intelligently is going to be critical, because to bring something to market that allows real value, you're going to bring in multiple partners in most likely scenarios. And how you do that, right, to protect yourself as well from a technology perspective is going to be with the best in class in fraud protection, the best in class in maybe UX, right? And if the power is combining all of those into a solution that differentiates you, right? And that all happens behind the scenes.
Yeah, it's kind of like the man behind the curtain, the wizard. From your perspective, Russ, are we doing enough to drive payments innovation?
We're not moving fast enough.
So what would you like to see?
Well, I'd probably say ubiquity in RTP would be nice, or at least functional. I mean, I actually think we've made some huge strides there. So today, we can touch about 70% of all DDAs in the country. I think the long tail in this has actually been the service providers to smaller financial institutions. And so Jack Henry has been a superstar in terms of bringing institutions live, credit unions and smaller banks. FIS is there, but actually next week, Fiserv will finally connect to RTP. And Fiserv serves 3,500 small banks and credit unions. So the technical path for them to just say yes is, and you can say thank you, we've done all the hard work for you. The technical, I couldn't resist. So the technical,
go way back. So that's
maybe I should have sat in the middle.
Nothing changed. Russ always has a surprise comment, and none of us are surprised.
It's all good fun. So that brings, that opens the door to 3,500 institutions. So I think that's huge. So RTP, I think, is something, instant payments, whether it's RTP or FedNow, banks have to make their own choices on that. But I think that's huge. I think the other thing that Steve probably talked about yesterday, Steve Ledford, which we're very excited about, and Matt's been involved in, and a few others in this room, is IXB. And that's immediate cross-border payments. We think that's really exciting. So if you think about interoperability globally, there's around 50 or 60 real-time systems that are either in place globally or in the process of being delivered. And all of those systems, for the most part, are ISO 20022. And they all have attributes that actually suggest you could link these systems. And so what we proved last year was you could actually link the European RT1 system with RTP, and we could actually coordinate settlements. So we have atomic settlement between the two systems, and we can pass messages between the systems. So there are ISO messages, US to Europe and vice versa. And request for payment is going to be part of that mix. So we can expect that you'll have a request for payment that could originate in Europe and land in the US and vice versa. We're hugely excited about that. So that's something we've been working on with SWIFT and with EBA clearing in Europe. It'll go live in a pilot, touch some wood, this November. And that'll be real money, real transactions between banks and real customers. So we're very excited about that. But importantly, it's being done in a way we think, quickly move it to the next market. So as you think about adjacent markets, Canada comes to mind. It's the largest trade corridor for the US. So I'd be very excited to connect to RTR when that comes live next year. The UK is one that people are very excited about because of the sterling. So as we think about making the world smaller and connecting ISO and creating interoperability, this is one way to do it, is through those RT systems.
Yeah, I think just to add on IXB, I think the real criticality there is, think about a future where you're a smaller domestic bank and you're a member of an RTP system in that country. Now you can get access to RTP systems without being members of those RTP systems. And that's the game changer, right? You heard P27, basically what they're building in their small little community. You get access to all the countries in one shot. And this is the future, I think, of interconnectivity, right? Or one of the options, right, that's going to be out there, where now you can reuse, right, to your earlier question, well, how do I spend my funds wisely? How difficult would it be for them to join all those real-time payment systems? It's very expensive and very difficult, right? So now you get one and you get access to all. Sorry, Sharon.
No, I was just going to agree with that. And because at the Fed, we've had a Fed Global, it's been on the ACH side service for over 20 years, and we reach right now across 33, 35 countries. And it really has been very educational on working through some of the tensions and pain points that Russ was mentioning, as we think about, engaging with those other payment systems, and how do you How do you deal with mismatches in formats or settlement rules or that sort of thing? And most recently, even though we offer that service over Fed Global ACH, many times as we're going into those other countries, those payments are actually getting introduced into the instant payment systems in those countries. So it's actually facilitating, faster settlement for those sorts of transactions. And we're looking at continuing to expand our reach in other geographies as well. So that's an area I totally agree is part of the future.
I think there's a lot of confusion about the different cross-border options. And I know we've talked about, over the past couple of days, the challenge when it comes to exceptions. But I think this is different where organizations want to participate, but they're not sure what they should be asking themselves or where to start. The larger players want to enjoy and have options and want to fuel the innovation and be leading charge. But I think the smaller participants are going to need help. And I was talking to Matt earlier, I think you're going to see the advent of actually more correspondent banking, more players get back at the helm to educate and be anchor banks to smaller participants and offer value. And you're going to see communities come together to be able to enjoy, whether it be real-time payments, whether it be overlay services. I think we need to look at things a little bit differently. Sometimes we love to talk about payments so much that we forget that most people are looking at payments as that embedded experience now. I've got my Uber and they don't realize they're doing the transaction. They're just getting the Uber ride and they happen to know up front what the charge is going to be. We all have had different experiences that have fueled our perspectives. And I think before we look forward, we should look back. And I'd love to hear from each one of you, what really you feel has impacted your payments experience personally and professionally over the past, decade or through your career. I'd like to start with you, Matt.
Yeah, to me, you can't get away from the fact of the seam, in your personal life, how easy it is to purchase things online. Was amazed, right? I don't take a subway on a normal basis anymore because I have the luxury of walking from Penn Station, a lovely little walk up 7th Avenue every morning or every couple of mornings now a week that we're back in the office. But now I don't need to get a subway card. I have my Apple Pay. And so far it seems to be at every subway station I've been at, right? I can just turn that on and get through the turnstile, right? The ability to just, not have to actually ever bring your wallet out, right? Every now and then I forget my wallet because I don't really use your wallet that much anymore. We've been stuck at home. And you can still, same thing, Apple Pay, oh great, it's just connected to my card. So to me, looking at that and then thinking about, right, that's my personal life, how easy it is. Unfortunately, it's been easy then for my wife to spend money as well. With the Amazon boxes, I don't know if there's 2 days to pass that an Amazon or some sort of box isn't showing up at our doorstep. But then kind of bring that into professional life. I think that's where we're going to start seeing things I kind of talked about earlier, continue to transform for that simplicity of everybody. How do we make it valuable and easy for all participants in the ecosystem to do things, right? From the very large corporate up to financial institutions. I do agree, right? We kind of went through this transition, right? I'm not going to get into the debate of correspondent banking, right? The pros and cons. The reality is that model, the model of a central provider of services, whether it's a market infrastructure or a bank, isn't probably really going away anytime soon. Even all the successful models in the fintech space, the PayPals, Venmos, right? They use the same model, right? They are just in a closed loop system. So I don't really see things drastically changing, but I do see, right, the ability to connect things, right? We're going to be very soon. I think I probably can. I haven't updated any of my appliances, right? But you're going to be buying the milk just on your refrigerator, right? Your air conditioning filter is going to run out and you're not going to have to order it. Your air conditioning is just going to know it's been 8 months and the filter is going to show up at your house, right? There's going to be a payment behind that, right? There's going to be something that occurred, right? So everything's just going to start happening. And I think to the earlier, how we manage and control that as individuals and corporations is going to be interesting because it's going to allow for speed, but the control of that is going to be something that we're going to have to think through very, very thoughtfully.
Thanks, Matt. You know, earlier in one of the sessions yesterday, somebody talked about Blockbuster. And I remember when I moved into my neighborhood, what now is the TD Bank branch was Blockbuster. And you think about, you know, even every one of us who has one device, multiple devices, where is the Palm Pilot and the BlackBerry now? The concept stayed, but how it was executed and the client experience was different. So when I think about my experience in payments, and I think about the Internet of Things, I think of the payment of things, you know, the car talking to the gas pump. Somehow my wine refrigerator always seems to be full, but the milk is empty. Russ, from your perspective, you know, what's influenced your experience?
Yeah, I'm not so worried about the milk, it's the wine. So I'm going to build on Matt's comment, right? Because it is embedded finance. And so what makes that work? It's actually tokenization. So behind the scenes, what Apple Pay is, it's actually a tokenized credential. It's not the PAN number of the card. And so one of the things we rolled out recently is the ability to tokenize an RTDDA. So just as you could provision a credit card into Apple Pay, you could provision an account number into Apple Pay. And as you think about whether it's a refrigerator or any one of these myriad of things, ultimately tokenization is part of that end game because it provides a security layer that's just essential to how you can actually play in that embedded world.
Cheryl, what's your perspective? You've, you know, seen different things throughout your career at the Fed, and you, I know, have lived in different cities and have personal and professional experiences. You know, what do you feel and think about this?
Yeah, I'm going to answer it a little bit differently because number one, I agree with what Russ and Matt said. I think that we're going to see more of that. But kind of where I'm at in my life right now. So I have a 21-year-old who's still learning how to manage finances, and not so well, I would say. And I have an 82-year-old dad who is no longer really able to manage his device. So he doesn't have a smartphone now because he can't physically kind of manage it, but yet he's still living on his own. So I think we have to really challenge ourselves to think about, as we think about this technology and all gets embedded and we have things that just order and charge us, and kind of like, how do we promote transparency of how that works, control for the consumer end user to be able to turn that off if they don't want it, or if they, you know, financially can't afford it. You know, and that then goes to, you know, how do we think about, you know, our aging population and putting right tools in their hands? You know, how as we as financial providers think about, you know, it's not just us in our prime being able to use all that technology. I think we have to think about kind of the longer term implications. One of the things that this is kind of in addition, kind of tangentially also focused on at the Federal Reserve Bank of Atlanta is a big focus on payments inclusion. And how do we think about promoting accessibility to financial services for those that don't have access to those today, or primarily rely upon cash, for example. And you know, that's a fairly large population, and I think we can't forget about that as we think about innovating on top of all of our electronic capabilities.
You know, you've raised some important themes. You know, I too have parents who are challenged with their phones, one of which he somehow figured out how to post a picture on Instagram, but he has Parkinson's and can barely talk anymore. And my mother had an incident the other day of fraud and was on with the bank and couldn't figure out. They kept trying to explain to her how to do a screenshot. And my brother happens to be a cybersecurity professional, and she calls both of us frantic, not knowing what to do. And my brother just explains to her, just go into the branch, Mom. And she was frustrated and concerned that, you know, she couldn't communicate in a way that was meaningful. And she said they were really trying to be helpful, but she said, I'm afraid, because what if I press the link that I shouldn't press by trying to take this photo? So I think you are raising important themes. We also see it on the other end with my nephews who don't understand the video games that they're buying actually has funds attached to it.
Oh, yeah.
And then
We went through that phase too, after I
Yeah.
think $500 later of in-app purchases. So,
I guess
yeah.
there's a special program at Apple where they're very familiar. My sister was able to get several $1,000s back after explaining some kind of unlock game, and they apparently have a whole program around it because it happens quite often. Well, thanks for sharing a bit about your experiences. I know that things are changing rapidly, and it is an exciting time for us to be in enabling commerce. Really, that's what we're doing in payments. And I think it is important for us to continue to educate. We know where we are now, and things are moving quite quickly. If we were to look out 5 years from now, what would we imagine things to be? Cheryl, why don't we start with you?
Sure. 5 years isn't, it seems like a long time, but it really isn't a long time in the grand scheme of things. We're talking about launching FedNow next year, focusing on ISO transition, a couple of years after that. So what I hope to see kind of 5 years from now is broader adoption, maybe this ubiquity in instant payments, whether it's across FedNow or RTP. And, I still think we're going to have, nothing is going to sunset in 5 years, but I'm really hoping that we see that continued drop off of checks, and that we can start really thinking about, maybe we've made some progress on finding maybe the trigger to accelerate that even faster, which I think is instant payments as we move forward.
Great, thank you. Russ, over to you.
So we've been talking about technology, and I think 5 years from now, even today, I think we need to step away from it. I think individually, personally, and societally, I think we get too consumed by it. So I think 5 years from now, yeah, payments will work, and we'll do all this stuff instantly, and it'd be great. But I do think we need to find a place where we can be human again and put that thing away, and just look at the people around us, talk, engage, enjoy the great outdoors. But so not more of a philosophical and
So voice activated payments then.
Yeah.
Just kidding.
So do I have to pay for that?
Yeah, where do we find balance in this interconnected world where we're going to be on 24/7? Where do you?
I wonder if there's actually a revolt against some of this, right? So this notion that my fridge is going to be connected to the internet, maybe I'm a bit of a Luddite, but I get creeped out by this stuff, and more and more of it is because it's all data, right? So somebody now your fridge knows what you right. It's all about the data, and it's all being monetized somehow. So yes, that may be the future, but I also wonder societally of whether we actually say, hang on a second here, what are we doing to ourselves?
Well, do we want a Mission Impossible life? Do we want to have
I want the metaverse.
Yeah,
Even my daughters agree on that. The fact that I can agree with my 25-year-old on something is actually.
We don't have enough time today to talk about that topic, but perhaps another time, Russ.
Therapy session.
I want to open it up for questions, and really appreciate the thoughts from the panelists. I know we're running towards the end of the session, but want to open it up to those who are in the room or on the line that would like to pose anything.
You want to go first?
Sure. So the question was, how do we see FedNow and RTP kind of like playing nice together kind of once it's launched? So I think we've already been collaborating on a number of things as it relates to things like standards, as we've talked about, and things about the fact that we want to get a part where the industry is adopting kind of instant payments. I think we're going to have to continue to have those conversations. And yes, the products are going to compete, just like ACH and EPN, or Fed ACH and EPN compete today. But we find areas where there are places where it's important for us to collaborate and cooperate on various solutions. And I think we'll continue to find those across FedNow and RTP as well.
This is a bizarre relationship for me because we're regulated by the Fed, we compete with the Fed, and we collaborate a lot.
Yeah.
So, it's multiple hats that you wear, and we have a great relationship. Cheryl and I have, all kidding aside, have a good relationship. And I think that's important to have. They will compete. I think we have been collaborative in the sense that the Fed approached us about working on the ISO standard and the message spec, and really it was in the interest of the industry to let's work together to make sure as you developed your spec, it was close enough to ours that it wasn't really going to be disruptive if a bank was going to join both or join FedNow. So I think there is going to be areas where we continue to collaborate. I think certainly on security and payment system security, that's an area where we have an absolute joint interest in making sure we do everything we can for that.
Agree.
Wait.
Oh, do we have an hour? So the answer is pretty much any way you want it. But ultimately, the originating customer, right? So that bank is first in the chain and is the first bank that's going to offer a rate to their consumer or corporate. So that is, I think, something that's really important. So in terms of monetizing the transaction, the originating bank stands first in the FX chain. The way the system's designed, there are intermediary banks that play a role, but it's not a traditional correspondent role. So they'll provide a wholesale rate to that retail bank, and then the retail bank can mark it up. So that's kind of the happy path, I would suggest. There's other banks, there's other options that might include you could source your own liquidity in a foreign market. So we've had some banks that have expressed an interest in doing that they already have euros in Europe and they'd rather just pay out of that euro account. So there's ways to facilitate that as well. So it can be a lot of different things, but that's the base one is what I described.
Are there other questions before I go to final thoughts from the panel? For those who couldn't hear the question, it's about the decline of the check, what we could be doing to help accelerate that.
Yeah, so I'll offer my perspective on that. I think getting to the point where, so if you think about the attributes of a check and where the sticky use cases are, it's surprisingly still kind of the business to consumer, consumer to business, more probably business to consumer in many respects. And so the businesses are going to have to continue to invest to electronify those. But then also it gets to having the right information of where to send those payments in an electronic fashion. So think directories, think, how are you able to originate that transaction electronically with all the information that you need in order to get it to the right recipient. To me, it's looking at investing in those sorts of things to accelerate the paper transition.
Yeah, so what is it, about 50% of checks are still business originated?
Mm-hmm.
Consumer's gone down a lot, and Zelle is a big reason for that. Venmo too, I suppose. But so one of the things we've done in the last year or so is we actually engineered the ability to use the Zelle alias to route a disbursement to a consumer or to route a request for payment. So if you think about Verizon and they're in the call center and their customer wants to pay the bill, they could actually use the Zelle alias, which Verizon probably knows is their phone number, ping the directory, and if it's the right person, then they could initiate the request for payment directly to that person's mobile app and pay it right instantly, right? So I think that starts to get rid of some of the checks as well that are late legacy system use cases.
Mm-hmm.
And several of the FIs, we're working with clients, especially with the pandemic, the concept of visiting a lockbox or those that hadn't image enabled themselves were struggling. So several are now working with their trading partners to see if they'll take different electronic options. And that's where real-time payments and requests for pay and those options, give more leverage to businesses to be able to offer different trading terms.
It is amazingly resilient though, right?
Yeah.
I mean, we saw a huge decline at the onset of the pandemic. So they came back.
Yeah.
That's what I was gonna say,
And it's
yeah.
been pretty
Same thing.
flat, right? It's, as a matter of fact, on SVP code, check volume is up this year
Yeah.
over last. I don't know if you're seeing the same,
Mm-hmm.
which boggles your brain.
Yeah, you know,
Go your brain. Yeah.
it is interesting because people thought, okay, with cash and coin, people were afraid to use it. Then we have, of course, the coin shortage. We all, you know, we're seeing digital natives now with millennials. We all are driving for innovation and to be faster, yet we did see the trend that all, yes, checks are rising again. But as banks have done everything they can to make them feel digital, and Matt and I were talking earlier about Check 21, maybe in some ways that helped one problem, but maybe it helps the life of the check as well.
I completely
So,
agree with that.
Maybe we
Yeah.
should price the product differently.
sort of like phone in payments. Anyway, on that note, are there final comments from the panel? Oh wait, we have more questions.
So we actually have banks today that are the entire Zelle experience is on the RTP tech stack, and more of that's going to happen. So a lot of the Zelle banks are moving in that direction. So for those that don't understand how Zelle works today, there's a proprietary message that Zelle moves between the sending bank and the receiving bank, and the banks post on that message. But most of the settlement is actually going ACH, usually next day. But increasingly, we're moving to a place where it'll be on RTP. And so the banks will be using the ISO message, populating it with all the information required for Zelle, routing it through the RT rail. And the benefit you get for that is it settles instantly, as opposed to using the secondary ACH process.
Well, thanks, everybody. Sorry. Thanks, everybody, for your active participation in the session. I want to turn it over to the panel for any final thoughts.
Yeah, I think request for payment. If people should leave this room, get smart on what request for payment is, what the power of that tool is. I think it's hugely valuable for your corporates. It's going to be hugely valuable in cross-border. So I think that's the game changer. It's a way to give transparency to the payer and to give control to the payer. And ultimately, I think that's what they're looking for.
Yeah, and maybe I'll just leave you with just a request. So if you're interested in learning more about a lot of what I talked about, especially about FedNow, just encourage you to go out to fedpaymentsimprovement.org, our FedNow websites. We've got a lot of great resources out there about our progress. We've got a kind of a vendor kind of showcase and just a lot of good information that will help you also connect with others that are going to be interested in connecting with us on FedNow.
I'm going to throw just a topic we haven't talked about here that I think will be important as time goes on, which is tracking the ESG rating of transactions. I think is going to be the next game changer. It may be 5, 10 years away, but as this becomes a topic that is of critical importance of corporations and governments and everywhere across the board, the ability to know you're doing the most ESG efficient or transparent transaction at some point is going to be critical. I think it's going to be difficult to do, right? We don't even have ESG ratings, this carbon buyback. I still don't understand the whole process of how all this works, but I think it's something that everybody, if you're not thinking about it now, my guarantee is very soon in some form or fashion, you'll be thinking about this. It's going to be a critical aspect that's going to come into our space, and how we manage it from a transactional perspective, I think is going to be very important.
So is that the death of Bitcoin?
Well, if it's mined, if you use mining as part of the piece.
So we're going to have socially responsible, fast payments. So I think a lot of food for thought, great conversation. I can't thank BAFT enough for giving me the opportunity to moderate a panel with such great industry leaders, and thank you all for your perspectives. Yeah, I think if anybody leaves this room, you should know, get involved. Ask questions, drive awareness. There are great resources available to you, and request your pay RFP. Anyway, all kidding aside, everybody, we really appreciate you sticking it out with us. Please, take the time to ask questions even after the session, and thank you again. Barry, over to you. Thanks, everybody.